Um, Good afternoon, ladies and gentlemen. Um, the Monetary Policy Committee met on 23rd and the 24th of November 2020 amidst the announcement of the discovery of several high-efficacy COVID-19 vaccines, resulting in stronger optimism for improvement in global output. However, persisting weaknesses in crude oil prices, soaring global debt, and high unemployment persist. In the domestic environment, the Nigerian economy slid into recession in the third quarter of 2020, following a second consecutive quarter of contraction in output. The third quarter contraction was, however, milder than the previous quarter. The committee appraised the developments in both the global and domestic economies, as well as the outlook for the rest of the year and the first quarter of 2021. 10 members of the committee were in attendance at this meeting. The global economic developments. Although the global economy witnessed a better than expected recovery in the second quarter of 2020, it, however, continued to be weighed down by the headwinds largely associated with the COVID-19 pandemic and weak crude oil prices. In the advanced economies, the persistence of weak aggregate demand, slow recovery in supply chain networks, and the rebound in COVID-19 infection rates have cast a new wave of uncertainty over their recovery in the short to medium term. In the emerging markets and developing economies, China continues to lead the recovery, recording a stronger than expected growth in the second quarter of 2020. In India, on the other hand, growth continued to be muted as a result of increasing rates of COVID-19 infections and fatalities. In general, this group of economies is set to contract less compared with the advanced economies led by the expected strong recovery in China. Consequently, the International Monetary Fund (IMF) reviewed the forecast for global growth in 2020 to reflect a slower pace of contraction from -4.9% to -4.4%. Inflation in most advanced economies is expected to remain subdued in the medium term to long term, as aggregate demand remains weak across several economies, reflecting the impact of the pandemic on income. The U.S. economy has, however, maintained a steady pace of job creation, even though infection rates and total fatality continue to rise in that country. The threat of a rebound of the pandemic in several countries has resulted in second and third waves of lockdowns in these countries. This is expected to further dampen aggregate demand and slow the pace of price development. In several emerging markets and developing economies, inflation remained relatively high compared with the advanced economies, owing to the persistence of exchange rate pressures, dwindling capital flows, and weak accretion to reserves, as well as other structural issues. In the financial markets, conditions remain relatively stable, buoyed by continued monetary and fiscal stimulus. The huge level of monetary and fiscal injections has, however, increased the likelihood of a global financial crisis post the pandemic, especially when central banks commence normalization of monetary policy. The domestic environment. Data from the National Bureau of Statistics showed that real GDP contracted by -3.62% in third quarter of 2020, compared with -6.1% and 2.28% in the previous quarter and corresponding period of 2019, respectively, thereby pushing the economy into recession. The oil sector contracted further by -13.89% during the third quarter of 2020, from minus 6.63% in the previous quarter, while the non-oil sector contracted by minus 2.51% during the third quarter compared to minus 6.05% in the preceding quarter. The persisting weak performance was mainly attributed to the lull in economic activities associated with the low price in the oil market, as well as the lingering effects of the coronavirus pandemic. MPC observed the gradual improvement in manufacturing and non-manufacturing purchasing managers' indices, which rose to 50.2 and 47.6 index points respectively in November 2020, compared with 49.4 and 46.8 index points in October 2020. These developments signpost an increase in economic activities driven by growth in new orders, improved supply delivery time, rising production levels, and new export orders. The employment level index components of the manufacturing and non-manufacturing PMIs also improved in November 2020 to 47.3 index points and 46.7 index points respectively, compared with 46.0 index points and 44.2 index points in October 2020. The committee, however, noted the likely downside risk to growth of the recent unrest in the country, warning that this may adversely impact economic recovery in the near term. The committee noted with concern that inflation has been on the rise for the 14th consecutive month, as headline inflation year-on-year moved up to 14.23% in October 2020 from 13.71% in September 2020. This was attributed to the increase in both food and core inflation, which rose to 17.38 and 11.14% in October 2020 from 16.66 and 10.58% in September 2020 respectively. The continued increase in food and core inflation was attributed to the persistence of insecurity across the country, as well as lingering structural deficiencies impacting logistics of moving food items to urban areas such as poor road networks, unstable power supply, and a host of other infrastructural deficiencies. Other factors include the persisting impact of coronavirus-induced supply disruptions, recent hikes in price of energy products, PMS and electricity, and weak crude oil prices. The committee, however, noted that the rise in inflation will likely abate in the medium term as domestic production is expected to recover following the resumption of economic activities post-COVID-19 lockdown. In addition to this, food inflation is expected to moderate as harvest season sets in. Monetary and fiscal policies are also expected to continue their broad-based stimulus support towards food recovery. This will involve fiscal measures to reduce unemployment, provide an enabling environment for private sector investments, and necessary support to the health sector to cushion the impact of the coronavirus pandemic. In addition, the CBN is expected to sustain its various intervention measures to boost consumer spending and support recovery. The committee noted that growth in broad money supply M3 increased marginally to 3.53% in October 2020 from 3.20% in September 2020, reflecting an increase in net foreign assets. It further noted the moderation in contraction in net domestic assets to minus 2.19% from minus 5.05% in the previous period. Aggregate domestic credit, however, grew by 7.61% in October 2020, compared with 7.35% in the previous months as a result of the bank's policy on loan-to-deposit ratio, supported by the bank's interventions in the various sectors of the economy. Total gross credit by the banking industry stood at 19.54 trillion naira as at the 13th of November 2020, compared with 19.33 trillion naira at the end of August 2020, an increase of 290 billion naira. When compared with 15.567 trillion at the commencement of the LDR policy in May 2019, total gross credit increased by 3.976 trillion naira. These loans were granted mainly to manufacturing, 738 billion naira, general commerce, 874 billion naira, agric and forestry, 301 billion naira, construction, 291 billion, ICT, 231 billion naira, just to mention a few. Committee noted the reduction in interest rates on loans granted by deposit money banks, and as at October 2020, 86.23% of total loans granted to over 1 million customers by deposit money banks were at interest rates considerably below 20%, and this was an improvement from 76.43% as at July 2019. MPC noted the improvement in financial soundness indicators of the deposit money banks in Nigeria, which showed capital adequacy ratio of 15.5%, non-performing loans ratio of 5.73%, and liquidity ratio of 35.6% as at October 2020. As regards non-performing loans, MPC, however, noted that the ratio remained above the prudential benchmark of 5% and urged the bank to sustain its tight prudential regime to bring it below the benchmark. Committee welcomed the improvement in the financial soundness indicators of the other financial institutions in the sector, as indicated by the growth of 582 billion naira or 16.94% year-on-year in aggregate assets to 4.02 trillion as of September 2020. Similarly, aggregate credit grew by 217 billion in the OFI sector, or 12.27% year-on-year to 1.99 trillion naira during the same period. Capital adequacy ratio for the subsector also exceeded the minimum prudential ratio of 10%. The committee recognized the supportive developmental roles of the CBN towards addressing some of the structural issues in the economy. The MPC specifically expressed optimism on the future impact of the disbursements from Agribusiness Small and Medium Enterprise Investment Scheme, the AXMIS, by 92.9 billion naira to 24,702 beneficiaries, Anchor Borrower Program by a sum of 164.9 billion naira to over 954,279 beneficiaries, and COVID-19 Targeted Credit Facility to households and SMEs by 149.2 billion naira to 316,869 beneficiaries. Liquidity conditions in the banking system continue to influence money market rates in the review period. The OBB rates declined progressively as a result of rising liquidity levels in the banking system, while there were no transactions at the uncollateralized interbank call window. Consequently, the monthly weighted average OBB rate declined to 1.88% in October 2020 from 3.5% in September 2020. The committee noted the recent impressive performance recorded in the equities market, particularly the increased patronage by domestic investors, largely driven by low yields in the money market. The all-share index increased by 20.55% to 30,520.69 on October 30, 2020, from 25,327.13 on September 30, 2020. Similarly, market capitalization grew by 20.82% to 15.96 trillion from 13.21 trillion over the same period. This improved performance was largely attributed to positive third quarter corporate earnings as investors moved in to pick up bargain stocks. Committee observed the moderate decline in external reserve position, which stood at $35.18 billion as at November 19, 2020, compared to $35.95 billion as at the end of September 2020, as crude oil prices continue to fluctuate with downward pressure. Our outlook. Overall, medium-term outlook for the global economy is beginning to show a ray of optimism following the discovery of COVID-19 vaccines. In the domestic economy, available data and forecasts for key macroeconomic variables also suggest optimism in output growth during the fourth quarter of 2020 due to the positive outlook for most economic activities. Accordingly, the economy is expected to recover from the recession by the end of 2020, while the inflation is projected to moderate by the first quarter of 2021. Committee's considerations. Committee's considerations remain focused around tailwinds imparting upward pressure to domestic prices and key headwinds to output growth. The committee noted that inflation continued to be driven by supply-side disruptions arising from COVID-19 pandemic and other legacy factors. Key amongst these are security challenges in parts of the country, increase in food prices, and the recent hike in pump price of PMS and electricity tariff. MPC therefore emphasized the need to address structural supply-side issues by putting upward pressure on cost of production and unemployment. To address the public health crisis associated with COVID-19 pandemic, committee urged the federal government to make relentless effort to procure a substantial quantity of the COVID-19 vaccines to surmount the public health crisis and pave the way for a broader macroeconomic recovery in the country. Committee noted that the contraction had bottomed out since it moderated significantly from minus 6.1 to minus 3.62% during the third quarter. This was so because both the Monetary and Fiscal Authority had anticipated the impending recession and had put measures in place for its quick reversion. Some of these measures include the Economic Sustainability Program by the federal government and other CBN facilities targeted at households, small and medium enterprises, youth empowerment, and reduction in unemployment. It thus urged the federal government to maintain its initiative targeted at reducing employment, particularly amongst the youths, citing the recent EndSARS protests and ensuing agitation by hoodlums as potentially disruptive to output growth in Nigeria. As a result, the MPC reiterated its support for the various development finance initiatives of the CBN to stimulate production and reduce unemployment. MPC further encouraged the bank to intensify its efforts by increasing funding to more beneficiaries so as to boost consumer spending and accelerate recovery from recession. On the financial markets, committee considered the improved performance in the equities market as a leading indicator of medium-term macroeconomic recovery. It thus urged the bank to maintain its policies on exchange rate and financial system stability to attract more investments into the equities market. MPC noted that credit to key sectors of the economy increased and encouraged the continued credit support to employment-stimulating sectors to hasten the recovery of output growth and improve employment, particularly amongst the youth. Committee emphasized the need for the CBN to maintain its regulatory surveillance over the banking system to ensure that non-performing loans remain low. MPC noted with pleasure the CBN's engagement with relevant stakeholders, particularly in the private sector, to hasten the recovery of growth. This engagement would involve collaboration towards job creation and provision of credit facilities to stimulate business activities to both corporate and individuals, particularly those who lost their goods and business premises to hoodlums during the recent protest. Committee's decision. At this meeting, the committee focused not only on price stability, but also on the need to speedily take actions to exit the recession. In view of these considerations, the choices before the committee were focused whether on the need to tighten the stance of policy to address rising price levels, recognizing its primary mandate of price stability, to ease to support output recovery, or to allow existing policy initiatives to permeate the economy. Committee noted that although the appropriate response to rising inflationary pressures would be to tighten the stance of policy in order to moderate upward pressure on prices, it nevertheless felt that doing this will exert downward pressure on the recovery of output growth. Committee also felt that tightening would negate the bank's desire to expand credit to the real sector at affordable terms, not only to boost production, but also to increase consumer spending. To the committee, tightening was therefore not the appropriate response at this time. With the economy, whereas MPC felt that government spending and the bank's expansionary stance would be desirable to support recovery and guide the economy out of recession, it felt loosening would trigger excess liquidity and worsen the inflationary pressures. MPC also felt that excess liquidity may impact demand pressures and fuel further depreciation of the currency. With respect to a hold position, committee was of the view that this will be beneficial as it will allow current policy measures to permeate the economy while observing the trend of developments. Committee also felt that the heterodox policies of the bank targeted at various sectors are showing positive results that will further engender growth. On balance, MPC was of the view that although all three options offer some benefits to the economy, the hold option was desirable at this meeting. Based on these factors, members voted in line with the most pressing need towards reversing the recession and achieving medium-term macroeconomic stability. In view of the foregoing, committee decided by a unanimous vote to retain all parameters. In summary, MPC voted 1. To retain MPR at 11.5%, 2. Retain asymmetric corridor of -100 and +100 and -700 basis points around the MPR, and 3. Retain CRR at 27.5%, and 4. Retain the liquidity ratio at 30%. Thank you.
Take some questions. Some of the correspondents are here, and some sent in the questions online. So we'll start with. Okay. That's your name.
Good afternoon, Governor. I am Nancy Naji, I have two questions. Governor, taking you up on some of the things you said in the communique, that 149 billion has been disbursed to over 316,000 beneficiaries under the TCF, Targeted Credit Facility, and under AXNIS, we disbursed over 92 billion naira. I would like to know, are there other steps, are there other measures? Because some people are yet to get alerts, or some people are yet to be credited. Are there other steps to credit other people? Because we know it's a recessionary time right now. People need to be stimulated, demand needs to be stimulated. That's one. The second question is, It's no longer news when the recession. That was according to the National Bureau of Statistics just on Saturday. Some of the contributory measures to the oil price and COVID-19. What specific steps is the monetary authority going to take to make us exit this recession quickly? Because the finance minister said it's going to be short-lived. Are there specific steps? Thank you, sir.
Good afternoon, sir. My name is Lara Fonai and I work with TVC News. I would like to know, as the parallel market rates have started climbing up again, I'd like to know what your comments are on this development. That's number one. Then the inflation rate now at about 14.23%. I'd like to know what measures you're putting in place to address this increase in inflation. Thank you.
Thank you. I have also some questions from some of the customers sent in their question. This one is from Nduka Shiji of the Nation newspaper. It speaks to me. In May 2020, you have warned about the looming recession if the country did not do the needful to enhance production and reduce the high rate of unemployment. Now that the country has entered into another recession, what is the CBN doing to facilitate the country's early exit from the recession? And the second one is from Obinna Chima of this day newspaper. The question is, given the youth restiveness we saw in the country during the third quarter of 2020, what is the CBN doing to respond and help youths in Nigeria?
Thank you.
Thank you, sir.
Nancy AIT talked about the fact that so far we've disbursed 149 on the targeted credit facility meant for households and the SMEs, and about 92 billion to AXMEs, whether there are more opportunities for those who have not accessed this kind of funding. Like you all recall, in March, at the outset of COVID-19, the CBN came out very, very quickly and put on the table a couple of initiatives that we believe are meant to help alleviate the pain of COVID-19 on our people. First, we talked about how the banks should restructure their facilities, how interest rates should come lower, particularly for CBN interventions, and how repayments could be spread for those who are owing banks so they have some more respite given that their cash flows have been badly affected. On another hand, we also proposed that for targeted credit facilities to households and small-scale businesses that are adversely impacted by COVID-19, that we're going to put on the table 50 billion naira for them. These are unsecured facilities meant for people who we feel are impacted and they just needed some little money either to start business or conduct some kind of consumption so as to help them live their lives during the period of pandemic. We also put on the table 100 billion naira for healthcare industry, for pharmaceuticals and hospitals, for the upgrade or building of new ones, and made available also a facility of 1 trillion naira to corporates who are willing to expand either in the agriculture or manufacturing sector. Let me say that to date, we have seen tremendous response on these initiatives. And I must also say that these initiatives, together with those that have come from fiscal, have been responsible for the somewhat moderated impact of COVID-19 on the lives of our people. To date, rather than even the 50 billion, the CBN has disbursed through its participating financial institution the sum of 149 billion naira to 316, almost 317,000 beneficiaries. On the healthcare, approximately 60 billion naira has been disbursed to 60 healthcare projects, whether they are hospitals or they are pharmaceutical companies who are into healthcare and drug manufacturing. On the real sector, we have disbursed 350 billion naira to over 105 real sector projects during this same period. For the AXMIs, which is for those that are going to small businesses, poultry, hairdressing, and the rest, brick making, and the rest of them, we have also disbursed over 92 billion naira to more than 27,000 people. For the youth under the Creative Industry Funding Initiative, we've disbursed almost 2.9 billion naira to our youth in the area of fashion, in the area of ICT, software development, in the movie sector, and in the music sector. Now that, yes, we have seen that this has been quite impactful, particularly the targeted credit facility, which is meant for household and SMEs, because what we saw during this period is that it has helped to boost consumption spending for our SMEs. And if you know or recall that consumption constitutes over almost 70% of output, you will know that this has been very, very impactful in moderating the impact of the COVID-19 on productivity and output and GDP in our country. We have been advised, or we have been nudged on by the MPC, that given that this has been very, very impactful positively, that the CBN should do more. We put 50 billion on the table. We've so far disbursed almost 149 billion to 317,000 beneficiaries. And we have been told that we need to increase it, not just from 150 or 149 that it is now, that increase it to almost close to about 250 to 300 billion naira to accommodate more people that have not accessed this facility. But we do insist that this must be done in a way that it goes round, because we found out that some zones are more represented in the country than others. But understandable that, for instance, a zone like North Central, where you have predominantly Abuja, or Southwest, where you have predominantly Lagos, will certainly have a larger share. But the important thing is that we want to use this as an opportunity to see what can be done to boost consumption spending for our people, and also see to it that output is stimulated positively for the growth of our people, for the good of our people rather. The second question also asks, what are the specific steps being taken to exit recession? Recession or contraction in growth, in output, is what we have seen throughout the entire world as a result not only of drop in commodity prices, but because of the adverse consequences of the health crisis created by COVID-19. In some developed countries, during the first, second, and even the third quarter, we saw some of them even showing double-digit contraction in growth. But in Nigeria, what we've seen, during the second quarter, we saw a minus 6.1% contraction, and I will use pleasantly in third quarter, a reduction in output to 3.6% negative during the third quarter. Let me say that we are hopeful, and the Minister of Finance had addressed some gathering yesterday where she said that she's hopeful that during the first quarter of 2021, Nigeria will exit recession. Based on data available to the MPC from the CBN, we are somewhat cautiously optimistic that indeed, if we continue doing what we're doing and do more, that there's a likelihood that we will see some little positive output numbers during the fourth quarter of 2020. But I can say with some level of certainty as well that we are so certain that during the first quarter of 2021, we will exit the recession. Why? As a result of all the actions taken by the monetary and fiscal authorities, NBS, National Bureau of Statistics numbers shows that 18 sectors during the third quarter recorded growth relative to 13 sectors during the second quarter. And this growth were recorded mainly from the agricultural sector, industry, manufacturing. Indeed, we saw even services dropping somewhat slightly. But agriculture coming on very strongly also means that what we can achieve from whatever we're doing to stimulate agriculture and manufacturing will create jobs for our people and also stimulate spending, will increase output, and ultimately lead to a moderation in the level of inflation in our country. The third question talked about the parallel market. And indeed, I heard some analysts talking about the parallel market, saying that exchange rate is at 480. I want to say this, that it is unfortunate and really unfair that even analysts who are supposed to know will play with numbers and begin to determine the exchange rate of our currency using parallel market rates. For the information of everybody, parallel market, as far as we know it and the data that we have, is a shallow market in Nigeria with no more than 5% of market share. Parallel market, and quote me, is a tainted market in Nigeria where people who desire to deal in illegal foreign exchange transactions, including sourcing of FX cash for purposes of offering bribes, corruption, that is where they deal. And that is where people who are supposed to understand the implication of this on the economic activity on our country begin to go to television and begin to say that our exchange rate is 480. This is very unfortunate that this is the way those who are supposed to know try to bend numbers in this country. Parallel market is a market where people who do not provide documentations to support their transactions deal in. It cannot be a basis to determine the value of our currency. Everybody knows and is accepted that the NFX market, which is predominantly the ironing window, is a market that should be used for determining the exchange of our naira. As far as we are concerned today, the NFX ranges between 380 going to 386, 387, and we have been very open about the market price determination factors in that market. The central bank has no hand in price determination in that market. And in any case, when people say that it should depreciate, the currency should depreciate. Nigeria has depreciated its currency this year by 28%. That is a whooping depreciation compared to depreciation in some countries. India has depreciated by 9% from our records. Indonesia by 4%. South Africa by 9%. Russia by 22%. Nigeria 24%. Brazil by 28%. Turkey 33%. And Argentina by 35%. I do not understand what and how people who are supposed to know will begin to crave further depreciation of the currency. But we are saying, even if the currency is overvalued, shouldn't we go through a stepwise process where the shock can be less felt than where those who are supposed to know how this works begin to create panic in the market by saying that the exchange of Nigeria is 480. It is very unfortunate. But on our side, we will continue to insist that the exchange rate is determined by forces of demand and supply in the NFX market. We do not agree that the determining factor for the exchange rate in Nigeria for our currency should be based on a market that is tainted, a market where people go to offer bribes, and you can imagine where you can pay any price to buy foreign exchange to pay bribe. We are not going to be party to that, and we will continue to say this to anybody who cares to listen. Fourth, he says inflation is at 14.3%. What measures are we putting in place? Well, you've heard everything that we're doing. But at this time, we felt, Monetary Policy Committee felt, yes, there are issues, growth, exchange rate, inflation, because interest rate is somewhat moderated. But we decided to, Monetary Policy felt that we should be looking more at exiting the recession. So, what do we do to exit the recession is what was the main focus at this. And then to address the inflation side, we said it is better for us to look at attacking inflation from the supply side. Supply side how? Offer low interest rate to people. Offer low interest rate to corporates. Offer low interest rate to small businesses, so they can go to work, so they can employ people. By employing people, we see improvement in manufacturing and industrial output. When there is improvement in industrial and manufacturing output, what you will see is that supply for goods will increase, perhaps surpass demand, so that prices can come down and ultimately impact positively on inflation. That is a strategy monetary policy has decided unanimously to adopt. It's not my position. It's a position of 10 people, and it is a unanimous decision, and we feel Nigerians should please allow us, give this a chance, and let's see how this works. Fifth question says, from Nation, that in 2020 we warned that we will go into recession. Now that we are into recession, what are we doing? All the stories I've been telling in the last 10-15 minutes are some of the things we are going to do. But we will do more, because we are hopeful. In fact, we are happy that it has worked, and hopeful that as we do more, it will impact positively on the lives of our people, and our economy can be better. But let me say this and assure people that what is happening is a global trend. It is a global phenomenon. And government, monetary and fiscal authorities are doing their best. No one would have thought that today price of crude is where it is. Sometime in February, March, price of crude was at $17 a barrel. Today it's at $44. But in spite of that, we are developing other strategies that would help us to diversify this economy from depending on oil. And that's why you could see from the numbers, non-oil sector contribution to growth has increased, while crude oil contribution has reduced. And that is what we need to continue to do. We need to continue to tell people that Nigeria should be a country with the highest population in Africa, a country with the highest GDP in Africa, should not be a country that sneezes when crude price drops. We are not in control of price. We are not in control of quantity. What kind of people are we that we would allow exogenous factors to determine the prosperity of our nation? This is time that we as Nigerians must think about diversifying the base of our economy. One way Nigeria has survived on agriculture before we found oil. And there is no need reinventing the wheel. We just need to go back to agriculture. Embrace the expansion in manufacturing and industrial output. Because that, as far as we are concerned, is the way ahead and road ahead for Nigeria. I thank you very much for your understanding.
Thank you, Governor. With this, we've come to the end of this briefing. Incidentally, this is also the last of the meetings of the MPC for the year 2020. God willing, we'll see you again in January 2021. Thank you, sir. God bless you.
Thank you.